Welcome back, everyone, to another episode of the Fundraising News Podcast. You got myself, Matt Marino, a customer success manager here at Dakota, joined, of course, by Peter Harris, a member of our research team. We've got episode 137. The date is, of course, Wednesday, September 24th. And we got a great episode in store, I should say, for our listeners. So let's jump right in. Peter, let's go with a couple key job and role changes that we've tracked over the past couple of days.
So Vincent Pang transitioned from Secure Trust Bank to Barclays as relationship director, serving as a vice president in real estate finance, where he now leads client relationships and financing initiatives across the real estate asset class based in London, which is one of my favorite cities. He actively develops strategic solutions tailored to institutional and corporate clients. An alumnus of the University of Exeter, which is just a really cool school, Vincent offers a research-driven perspective to his new role. Dalal Darwich transitioned to Bloomberg as an analyst on September 19th, 2025. So just a few days ago, so still very new, where he now offers generalist coverage across asset classes. He's based in the city of Dubai. Have you ever been to Dubai?
No, I have not.
I've never been either. He applies his analytical expertise to support Bloomberg's global financial intelligence and client solutions. He previously served as an associate at Goldman Sachs International, where he gained experience and expertise in financial analysis and client engagement. His move to Bloomberg reflects a continued commitment to excellence in the financial sector, with a focus on delivering high-quality insights and data-driven perspectives to institutional clients. And I think that just also aligns with how, data is just the new commodity. I think the way I view data, the way I think a lot of people view data, broadly speaking, is it's not really just a niche object. It's a commodity that's incredibly valuable. Now, Dana Culp transitioned to Vanguard Group as a wealth advisor also on the 19th of September, bringing his expertise in providing comprehensive financial guidance to a wider range of clients based in the great city of Philadelphia. Go Birds, exactly. He serves as a generalist offering tailored wealth management strategies that align with Vanguard's client-first approach. Previously, Dana worked as a financial advisor at Fidelity Strategic Advisors, where he developed experience in portfolio construction and client engagement. His move to Vanguard signifies the next stage in his professional journey, reinforcing his commitment to delivering personalized financial solutions and long-term value for clients. So now we're going to be talking about RIAs, M&A. What's going on here, Matt?
Yeah, it's still just a lot across the industry, consolidation. So I feel like every day just, becoming the talking point of the industry. So just a couple to call out: 3 former Custos family office advisors, Michelle Camp, Juan Crixel, apologies if I pronounced that wrong there, and Herbert Boyd. They launched Beacon Advisors Holdings as an independent RIA in Austin, Texas. This firm, Beacon Advisors Holdings, they're going to have a multi-custodial model where they're going to engage with Schwab, Fidelity, and Pershing on that front. Another one to call out here, Tiffany Alexi launched Altair Financial as an independent RIA in Cary, North Carolina. Alexi also owns and operates Alexi Realty Group, which is an affiliate of Phantom Realty. So just, doing a lot there. Good for Alexi. And this newly launched fee-only RIA, Altair Financial, as the name there, provides financial planning services centered on passive, low-cost indexing strategies. Third one to call out here, MAI Capital Management acquired a $612 million RIA, J.W. Coons Advisors. The advisory firm was founded by James W. Coons in 2003. The firm is based in Columbus, Ohio, with an additional office in Naples, Florida. Beautiful. Naples is awesome. Got family down there.
Nice.
Financial and legal terms of the deal, which closed on September 19th, were not disclosed. And Turkey Hill Management advised Coons Advisors during this entire acquisition. One other piece to call out here with MAI Capital, they had $31.2 billion in assets under management and $3.8 billion in assets under advisement as of June 30th of this year. So just a little bit there with some job role changes across what seemed to be primarily the wealth space, along with the M&A activity, of course, always falling across RIAs and financial advisor team moves. Let's jump institutional. and let's dive into some recent allocations and investments that we've tracked.
Well, also, I think that list really just underscores, we mentioned 3 southern cities. I think that also really just encapsulates and is really a microcosm of like the growth in the South that's truly tremendous, and also in Ohio. And speaking about Ohio, we are going to be going to investments. The State Teachers Retirement System of Ohio committed $100 million to private equity in August, adding new relationships while expanding with an existing manager, according to remarks at the pension's September 18th investment committee meeting. So obviously a big move there. The KPN pension, so it's a Dutch pension. The Dutch pension KPN pension funds reportedly tripled its commitments to the ASR Dutch Science Park Fund, raising its investments from $17.6 million in US dollars to $52.9 million in US dollars. The increase brings the fund's total managed assets to $305.5 million in US dollars, targeting investments in offices and laboratories for startups and scale-ups located near Dutch universities and scientific research institutes. And I think this really, one thing here really illustrates is that, the push for private capital to meet universities and scientific research institutes, it's not unique to the US, it's happening globally, and it's a really interesting trend. Now, to cap this off, the European Bank for Reconstruction and Development, they have approved in US dollars a $47 million equity commitment to Franklin Templeton's Turkey Fund 2. And the transaction closed just 2 weeks ago, September 9th. The vehicle will be managed by Templeton Asset Management Lieutenant of Singapore, with Templeton Turkey Fund GPSARL incorporated in Luxembourg, serving as a general partner. The fund targets small and mid-market companies in Turkey, and I think this also, just the European Bank's decision, I think it really illustrates how a lot of development banks in certain countries are becoming big allocators to private capital, and they're really trying to match private capital to really foster a lot of private investment.
And I think private investments continuing to just kind of take the forefront of the financial services industry, especially when it comes to committing capital, but still can't sleep on traditional opportunities. Even from a search standpoint, we've got a few here across large cap, small cap, from a growth and value standpoint. So the first one to call out with the City of Holyoke Retirement Board, they just issued a U.S. large cap growth RFP. We just posted this as of yesterday in Marketplace. We also sent this out to everyone that signed up for our search alerts. So some insights here. They're looking to allocate $30 million with a deadline of October 31st. For the plan itself, they use Mariner. From a consulting standpoint, Brian Green is your guy. He is the field consultant representing City of Holyoke, and they're considering an allocation to U.S. large cap growth. The mandate will be for a liquid U.S. large cap growth mandate, and looking for a commingled fund, LP, mutual fund as a vehicle. The mandate size, as I mentioned, will be right around $30 million. Another one to call out here, going to Haverhill Retirement System. We actually got a twofer, 2 search alerts here with Haverhill Retirement System. First one is for U.S. small cap value. Pulling it up here on my side. They work with Wainwright from a consulting standpoint, and Gustavo Gus, what he goes by. I'm going to pronounce his last name incorrectly here, but Aristizabal. Apologies, that is not even close to the pronunciation. As I mentioned, U.S. small cap value search here, deadline of October 24th, looking to allocate out a $25 million ticket. The request for proposal is being issued, as I mentioned, by Wainwright for the consultant there on behalf of the plan, which is just seeking proposals from investment management firms to manage anywhere between that $18 to $25 million ticket size of the system's defined benefit plan in a U.S. small cap value equity manager. And then also with the Haverhill Retirement System, we have another on the U.S. equities front, pulling it up here. So that one was for value. This one is for small cap growth. Deadline of October 17th. Same field consultant, Gus, and the same consultant there with Wainwright, looking to allocate $25 million also to a U.S. small cap growth product. And then one more here, just to mention, don't want to leave any on the table. We have a RFP issued from the New York State Insurance Fund. And what was disclosed here, not the amount, Amount was unfortunately not disclosed, but we know the deadline is November 20th of this year. They work with Mercer from a consulting standpoint, and the fund, the MY State Insurance Fund, is seeking one or more firms to provide passive investment services across U.S. equity asset classes. So NYSIF seeks to invest in a separate account structure for this RFP, and they do reserve the right to contract with one or more multiple managers for the mandate, or none, if they don't want to make any allocations ultimately. Should NYSIF make multiple awards, accounts will be assigned to the discretion of the plan and the fund, and will be based on factors including organizational expertise, managing passive assets, product offerings, and equity passive assets, and manager performance, track record, always vital as they're conducting their due diligence on where they want to invest. So I know with your segment there on the recent allocations, a lot of alts driven activity, but as we get closer to Q4, certainly across 3 different plans and funds here, some interest into the U.S. equity space. So let's go over to the second to last segment here, why all this ultimately matters for our listeners.
So just to really kind of an encapsulation on what this all means and just really strategic insights for GPs and LPs is, first and foremost, independence and consolidation continue to redefine the RIA landscape. So the launch of Beacon Advisor Holdings by former JP Morgan and Custis professionals, alongside Tiffany Alex's Altair Financial, they really they underscore how continued momentum for entrepreneurial teams building specialized RIAs are really, there's a lot of consolidation here. And then number 2, institutional capital is targeting niche and regional growth opportunities. And I think, Matt, this is something that we've really harped on, is there's a big, really targeting niche strategies right now, as evidenced by the rush for, sports investing or other really niche strategies that resonate with people and that are kind of seen to be as a hidden gem. So Ohio's new PE commitment, what happened with KPN and the Science Park Fund, and EBRD's backing of the mid-market via Franklin Templeton really help underscore this theme. And number 3, the consultant searches signals rotation and reassessment. And then last but not least, number 4, fundraising markets show divergence between scale and specialization. So right now, there's a big push to find something that scales, that will play in certain scenarios, but also finding a specialized niche that really resonates with a group of people and is seen as a really hidden gem. And the bottom line is capital is moving across multiple fronts as RIAs are both fragmenting and consolidating. So there's a huge rush to consolidate such a burgeoning asset class. Pensions are doubling down on specialized mandates, and fundraising momentum is strongest at the poles of scale and niche. For GPs, the opportunity is abundantly clear. Articulate your edge, prove your performance, and align where LPs are actively rotating capital. For LPs, this is a moment to refresh consultant and manager relationships to ensure alignment with long-term strategy in a shifting market environment.
Love it. And we'll call out one quick fundraising update here. Nexus Capital Management closed Nexus Special Situation Fund 4 with $1.4 billion in total capital from new and existing investors. So I feel like for everyone, always important to prospect, but also continue to dip your toes in the current clientele to find some re-ups. The fund follows Nexus Special Situations Fund 3, the firm's third private equity fund, which closed at $1.25 billion in 2020. So an uptick there, going from 1.25 to 1.4. So congrats to the team over at Nexus Capital Management. Quick call out for some upcoming events. We've got Denver on October 7th, San Fran on October 14th, Toronto, which I'll be up there for on the 28th of October. And we also have a New York event on the 28th as well at the New York Athletic Club. I'm sure a lot of our listeners are probably sitting in New York, as that is the spot to be for financial services. We don't have that registration link posted on the Dakota Cocktails page, which is dakota.com/cocktails. Reach out to myself, Peter, or anyone on our team here, and we can send that over so you can sign up, hold a spot, and join us for a drink. And last thing, this Thursday at 1 o'clock, I believe, I just want to confirm the time, we are airing our Dakota Way sales coaching. So that's a monthly webinar that we host for our customers, for really anyone interested in fundraising best practices, strategies, tactics, hosted by our CEO. Guy Costin. So with that, another great fundraising news podcast. Peter, thank you as always.
Thank you, Matt.
We will see you this Friday.
See you Friday.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediary database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.